Alright, so it is Friday, and as all Fridays today as well, we have the Ladies Special on Your Stocks, which means we answer queries from all our female investors. Joining us today to answer all your queries, we have Mayuresh Joshi as well as Prakash Gaba. Thanks a lot, gentlemen, for joining in. And on that note,
Mayuresh, what's your take on Glenmark? Would you advise a hold as well?
Oh yes, Sumit, afternoon. And a large element in terms of the softness in numbers were more to do with the base because of the Zetia component. But a large element in terms of their other businesses actually doing well, including their API business, actually augurs well. So the long-term business potential, which is their complex generics and the innovative pipeline that they've got with phase 3 clinical trials expected for one of their products, I think that probably augurs well in terms of how the revenue accretion will be, both for the India business, the US business, and the strong emerging market business as well. The two factors, however, will be how they'll be able to reduce their net debt of almost 4,700 odd crores. And the management has probably shown some amount of a guidance in terms of the base business being improving, margin expansion, and cash flow generation. So I think approvals for the innovative pipeline along with R&D spends being normalized, I think that should also support their margins. So yes, I think a hold from my side as well.
All right, a hold on Glenmark from both our experts. So I guess, Ms. Prema, that's all the advice you'd need for now at least. Up next, a query on SBI. We have Ms. Geeta Nair, who's written to us from Mumbai. So she says she holds 500 shares in SBI at 281. She's a long-term investor and wants advice on what she should do at the moment. So SBI making a bit of profit. Mayuresh, you see much more headroom on the upside?
So again, Sumit, I think it was very interesting because what they probably reported in terms of the bottom line, I think that was probably disappointing in terms of how the markets perceived it. But my own sense in terms of the management beefing up coverage is actually very, very positive from a long-term perspective. The second element in terms of their core slippages, which have actually moderated to 14,370 odd crores. If you look at the recoveries, they have bounced back very, very sharply to 24,900 odd crores. And the expectations of retail advances growing at a very fast clip, which is almost 28% of their total loans, along with the provisioning that they've done on their NCLT cases, which is almost 71% on both the lists, with the expectations of slippages expected to remain below 2% and credit costs around 2%. I think the NIMs reported should remain around this level of 2.6, 2.8, and that probably should ensure that the provisions moderate going forward. And again, I think that supports the overall earnings perspective for the bank. So I'm not overly perturbed. Yes, I think the power exposure that the bank has got might have some amount of elevated provisioning for a quarter or two. But the longer term story probably remains very, very robust for this behemoth. So I think a clear hold both in terms of valuations as well as the earnings perspective.
all right, a clear hold in terms of valuations and earnings perspective for State Bank of India. In the meanwhile, you want to take a hit at that? Someone holding Infosys for the last 21 years, what would you say?
I think it's a brilliant effort that he's or she's holding on to that stock. Absolutely agree with Prakash. I think even if you ask them for the otherwise, I think it will still remain a hold for the investor. So I think the stock has been doing pretty well. So what you've probably seen in terms of management changes, what probably happened in terms of the digital investments probably took a hit in terms of both the EBIT and EBITDA margins. But I think they are on a path of recovery. So the digital contribution to overall revenues is almost 28.5%. They have not changed their EBIT band of 22 to 24. The constant currency growth is still expected between 6 and 8%. And they are having very strong deal wins, so around $1,100 million of deal wins. I think actually augurs well for the stock. And you're probably seeing even the management traction keeping on track, utilization levels coming back to 85%. Attrition is the only concern, but that should also normalize going forward. So I think the investor should clearly hold on to this stock.
Yeah, I hope we had him on the line because I'd want to know what is the reason that 2 decades later he has chosen to seek advice now. All right.
I'm getting early rates, the earliest rates. So let's go across to Jigna Patel, who calls us from Ahmedabad with a query. Jigna, go ahead.
Yeah. I just want to know that I have 100 shares. So how long I have to hold it for 5 years, 1 year, and is it good in progress or something like
100 shares of Dilip Bilkon.
Yeah.
You bought what, 6 months ago or something? Because the price is around 1100.
Yeah, I guess I am not exactly. I don't remember, but yeah, I think 2-3 months or 6 months. Yeah.
Is this the only stock in your portfolio, Jigna, or what was the reason behind you buying this?
I just want to buy the share and I just want to try the new shares. And it's a good background. The shares background is good till if I can.
And you're in need of money right now? Or you can hold it?
No, I can hold it.
Okay. Mayuresh, Dilip Bilkon. Now the stock at one point went all the way up to 1200 rupees, then fell all the way down to about 500, 600 odd after being put into the ASM. Now it's recovered to levels of what it is trading at, 800, 850 thereabouts. What would you recommend to a person on a stock which has been so volatile?
So Mangalam, again, I think all the issues that you rightly pointed out, I think the ASM worries you probably had, whether the Shrem Group receivables would come through, the auditors fading out. I think that had a huge detrimental hit onto the stock. But if you look at the quarter numbers which just came by, I think the margins at 17.8 pleasantly surprised me. The order book that currently stands at 24,000 odd crore with an expectation of 10,000 coming in is again a very positive sign in terms of revenue visibility. What you're probably talking in terms of diversification, and the management probably expects that non-road orders to be 20% in the next 2-3 years. And though debt has probably moved a tad bit higher, with expectations of capex around 400 odd crores, including the mining projects and the receivables expected from Shrem, I think that should support the cash flow dynamics. So again, I think it's a very difficult stock, as you rightly pointed out. But since once is invested, he can probably hold on. But an alternate investment can also be KNR Constructions, whose numbers were equally phenomenal. So I think the kind of margins that they've posted of 20-odd%, expectations of margins staying around this level, debt to equity at 0.818 times, you're probably looking at ROEs in excess of 22%, and working capital days reduced to 30-odd days. I think you can't ask for more. So an alternate choice can also be KNR Constructions.
All right. Well, Jigna, I hope that works for you. For now, a very quick break. But as next question comes in from Kavita Jain, who writes to us from Jaipur. She has 10,000 shares of Reliance Communications. She bought them at 15 rupees about 15 days ago. So I'm wondering, why and what made her take this decision. But anyway, she's a short-term investor, so probably was looking for a bit of a pop. Prakash, you think the pop is there? She's made about 40,000. Get out?
Immediately.
Welcome.
Right now.
Right now. One of the few people who probably made 40,000 in 15 days in Reliance Communications. So get out right now. That's what Prakash's view is. With that, we move to Priyanka Patel, who writes to us from Ahmedabad again, holds 4 shares of Maruti at 9,500 rupees for the last 1 year. Long-term investor who wants to know whether to hold or sell. 9,500 rupees, Mayuresh, for Maruti, the long-term. Do you think it's a good price?
Oh, absolutely. I think Mangalam, no two ways about it. And when you're talking about Mangalam Organics, I think the person I'd like to bet on is Mangalam Malu. So coming back to Maruti, I think the volume growth probably sustains, and in my opinion, it should be a double-digit growth which sustains because of the strong waiting period for products like a Baleno, Desire, Brezza. What they've also done in terms of improving their dealer mix, both through Nexa as well as the other outlets, and the target of 4,000 on that front, which helped it to tap growth in the non-metro and tier 2 cities. The third aspect in terms of their Gujarat plant running at full utilization actually augurs well from a leverage perspective. And the petrol model actually accounts for more than 70% of their sales. So the margins should sustain between 15.5-16%, and the earnings growth should be quite reasonable as well. So yes, both from a market leadership position in excess of 50%, strong margin performance, leverage, and earnings profile, I think Maruti still remains a top pick for us, as well as a clear hold for the investor.
All right. Up next, Mrs. Sushma Ryan.